Hello and welcome to BloombergQuint. This is Vishwanath Nair, and we are here to discuss Yes Bank's performance during the July-September quarter. Now, of course, on Friday, the bank reported a 129 crore net profit. It also saw an improvement on its asset quality, higher provisions against possible defaults in the future. To discuss this with us further, we have with us Mr. Prashant Kumar, the MD and CEO of Yes Bank. Mr. Kumar, welcome to BloombergQuint. Let me quickly first start with a couple of questions regarding the results. A part of your profit growth during the July-September quarter came because of higher cost control. Just wanted to get a sense from you, what exactly did Yes Bank do during the July-September quarter that helped it post that sort of pre-provisioning number?
So, Ishran, if you see the profitability numbers, it is not coming only from the cost control. It is also coming from improvement on the interest income and also from the non-interest income. So I think all the three things together, interest income, non-interest income, and control on the cost side, is giving us a decent operating profit. And I'm happy to share with you that if you compare the quarter two performance of this year, we are almost there as compared to quarter two of the previous year. And in the current times, not only there is the impact of pandemic, but bank is also coming out from the certain events which happened in March. So if we take into account both these things, then I think our bounce back is quite remarkable. And we would be moving on the same journey on improving on the income side and also controlling on the cost. So on the cost side, fundamentally, there was no culture in the bank in terms of seeing how to avoid the wastage. So this is something what we have done. And in the first two quarters, the impact is mostly because of we are rationalizing some of our branches, rationalizing the rural branches, moving into the BC mold. We are also thinking in terms of rationalizing some of the ATM network. But fundamentally, it is more in terms of the mindset and avoiding the wasteful expenditure. We have also engaged a global consultant to help us in this journey. Because this journey on the cost control is not only limited to just avoid the wastage, it is also in terms of improving our process efficiency, so that there are better efficiencies in terms of the same manpower getting more productivity. So I think this journey would continue. And the current year, we are targeting for the full year also a 20% reduction on the cost side. Similarly, our expense ratio, if you see, March was almost 65%. And in 6 months, we are now less than 50. And we would like to work on it further and would like to bring it down to 45 by year end.
Right. With respect to certain branches that you said, as well as ATMs that you have looked at for rationalization, could you throw a little bit color on how many branches exactly it is that you're looking to rationalize? What is the number of ATMs and why?
So 35 rural branches have already been converted into the banking correspondent board. So functioning would remain the same. Only thing is our expense on our normal rural branch, which is almost 2 lakh per month, has come down to 25 to 30,000 per month. And there is no difference in terms of delivery to the customers. Similarly, we are also looking for almost 50 branches, which are very near to each other. So depending on the profitability of each of those branch and the proximity, I think we would like to take certain decisions in terms of merger. So maybe by year end, number of branches may come down by around 25. On the ATM side, the objective is not to scale down. The objective is to see the ATMs where the hits are very low. And one of the reasons could be other banks' ATMs are in the proximity. So because of this, we would like to identify those ATMs where hits are low. So our strategy is only in terms of seeing the advantage of any of these outfits. So either there is a scope for improvement in productivity or business, or otherwise we would like to rationalize this.
Okay. Let me go to the asset side of the business because that there certain developments have taken place. Of course, the bank's attempt is to increase the retail and SME portion of the loan book while bringing down the corporate loan as much as possible. To your mind, as far as business growth is concerned, how exactly are you going to achieve this? Because the rest of the industry is also pretty active in the spaces that you want to grow in.
So on the retail side, even during the second quarter, where there was the impact of pandemic, we were able to disperse something around 6,000 to 6,500 crores fresh loans on both retail and MSME side. And this quarter, we have already made our strategy very clear to disperse minimum 10,000 crores on both retail and MSME. And if you see the quality of our retail and MSME book is very good. And dispersing 10,000 crores, even having this kind of competition in the market is not difficult. Reason being that we are focusing on certain segments on the retail side, which is more in terms of consumer loans, the mortgage, the vehicle loans, the business equipment construction. And I think market is large enough. There banks, if we want to do the quality lending, there is a lot of potential which is available.
Okay. As far as the quality of the book, now you said that the retail and the MSME book have actually performed well. Talking about the corporate book, which is where most of the stress is coming from, do you see any further, apart from the ones that you've already identified, any further stress coming in because of the pandemic? Any rise in requests for restructuring under the August 6th circular?
So far, what we have seen that we have also in our presentation, we have disclosed the overdue position of more than 30 days. So if we see on the corporate side, the overall book which is overdue is something around 7,500. We are working on each of those loan accounts to see like they don't either slip or they don't go for restructuring. But at this point of time, very, very difficult to predict. I am also not ruling out anything which would go for restructuring even outside this book. We are working on each of those corporate loans. And I think the way that things would evolve further, we need to see. Because we also need to see like what would be the COVID impact in terms of, if you see some parts of the world like US and Europe, I think numbers have again gone up and the government is trying to put more restrictions. So that would be, we expect such things should not happen in our country. And I think if there is no negative surprise from the pandemic, then I think we would be able to manage it.
Right. 16.9% gross NPA, sir. How much further can we bring it down? You said you identified about 9,000 odd crore worth of loans, which are pending repayment. Even if we take that out of the equation, or if those get resolved, what is the extent to the reduction of gross NPA that can be expected by March 2021?
So I think again on the recovery side, there is an impact of pandemic in terms of efficiency in terms of recovery. So I think what we were expecting to have a recovery of at least 5,000 by year end, we may be reaching those targets, but I think it may also spill over to the next financial year. But still we are working and we have seen a recovery of almost 900 crores during quarter two. 550 crores coming from investment book and 350 crores coming from loan book. Since we started this journey in very bad times, but we have started engaging with each of those NPA customers, and we are hopeful now the outcome would grow geometrically since we are talking to everybody and the engagements are there. So this quarter would be definitely better than the quarter two.
Okay. One last question on the asset side, and then we'll move on to the deposits. As far as the dispersal of this differential that is part of the Supreme Court's compounding interest case, the government had come out with certain specifics on how exactly the structure would work. Is it a difficult process to identify customers under 2 crore loans and then ensure that each of them get the right kind of use that they are owed by the bank?
No, I think there would be some difficulties in terms of more about because as we understand the guidelines, this is the 2 crores exposure across the financial institutions. So it is not only related to 2 crores for the bank. I think all the banks together, it is 2 crores. So getting
Right.
this kind of information from all the banks would be definitely require some more efforts. But otherwise, if we have to identify within the banks, this is not difficult at all. But across the
Okay.
financial institution would be a difficult.
Right, sir. Let me move on to the deposit side. You saw a rise in the term deposit side of your book. You said that you opened about 1.5 lakh new accounts, but still the CASA ratio came down on a quarter-on-quarter basis. As far as the liabilities book is concerned, how quickly can you turn it into a more retail-focused book and ensure that your more expensive deposits are reduced?
So, Vishwanath, if you see even on the CASA deposit, we have grown by 20%. So 20% growth on the CASA and specifically 50% growth on the current account is not a small thing. Only thing is that even the term deposit growth is even much more than what we have seen on the CASA side. So our efforts on the CASA side would continue, but because of a very peculiar position of the bank, we don't want to discourage the term deposits also. But I think now the time has come that gradually we would be, say, reducing our rate of interest on the term deposit side gradually, so that we are able to have a balancing of the liabilities and the asset side in our balance sheet, and also at the same time are able to reduce our cost of deposit. But our focus on saving bank and current account would continue. And I think over a period of time, this CASA ratio would improve for us. And but even in the quarter 2, our cost of deposit has come down by almost 30 basis points.
As far as competition in the deposit space is concerned, sir, now across the industry, we are seeing historically low deposit rates in the term deposit cycle. Even on the savings account rate, the rates are pretty low. How do you see this competition panning out? Where does Yes Bank stand in all of this?
No, I think this such a low rate of interest, even on the saving bank side, if we see from a very large section of our society, which is a senior citizen or where we don't have the income generation capacities, then I think this is also something which is worrisome. Because inflations are high and these kind of rates, it's a negative return for our senior citizens who don't have the future income growth. So I think this particular part of the society and even the other part where we have a consistent income from other sources, I think this negative returns on savings is something which I think would trouble everybody. So I think in this scenario, and with a very good customer connect which Yes Bank is having, and also in terms of services standards, I think we are getting these kind of feedback from our customers that customers are very happy with the engagement and the quality of service which bank is providing. In addition to engagement and service, our digital capabilities also help in getting the more customer side. So we were able to open 60,000 CASA accounts during September, and we are targeting to add at least 1 lakh customers in next 2-3 months, every month.
Right, and this higher rate on the savings account rate, that would continue as far as Yes Bank is concerned, at least for the time being.
So like if you see last 6 months, we have reduced our rate of interest on saving bank side by 100 basis points. Okay, so we are offering 4% up to 1 lakh.
That is still higher than most banks, sir.
Yeah, this is higher. But I think this differentiation would continue for some time unless we reach to those kind of competitive scales.
All right. Thank you so much, Mr. Kumar, for joining us on this conversation. And thank you so much for watching.
Thank you so much.